Yeah, hello everyone. Good afternoon, good evening, good morning. Thank you very much for checking on us today. And in this short video, we are going to talk about price action strategy. And also, this video is going to just be part one of it. And you should be expecting part two, part three, part four of this price action strategy. So I will just kind of introduce you to price action and tell you what actually we mean by price action, right? Because a lot of you guys have been asking me, hey Israel, what is a price action? What is naked chart? And a lot of things like that. And as you can see right here on my screen, I don't use any indicators, right? As you can see, this is ADCHF 1 hour time frame. Those are supposed to appear hadn't been if I'm using any indicators in the forex market, right? So I'm a naked chart trader and also price action trader. Those are the main things that I kind of focus on. So right here today, I'm going to show you the price action aspect of it. Then maybe in few days, weeks, or months, I'm going to explain to you what I mean by naked chart as well. So right here, in real quick, let me just try to explain to you what we mean by price action strategy, right? So price action, according to me personally, I define it as a trader psychology in the forex market. Just take note of that. Trader psychology in the forex market. And what explains the trader psychology in the forex market is the candlestick patterns, So we have a lot of candlestick patterns in the forex market when it comes to trading forex, right? So we have like a Pinbar, Doji, Dragonfly, Doji, tweezers top, tweezers bottom, engulfing candle, and a lot of things like that. So today I'm going to show you one of them, maybe a Pinbar or a hanging man, right? Because whenever time I'm explaining a price action signal, I kind of try and tell my students or whomsoever I'm teaching him or her about price action. So right here, since you are the one that I'm going to be teaching price action right now, let me try to show you what we mean by a Pinbar. So right here, as you can see, this is ADCHF 1 hour time frame, and we are going to be talking about the Pinbar. So Pinbar, since we define price action as trader psychology, so Pinbar kind of explains to us what traders are expecting whenever time there's a Pinbar or whenever time Pinbar formed on a chart in the forex market, right? So usually, let me just try to sketch it out. This is how we are supposed to see a Pinbar in the forex market whenever time we are trying to trade it, right? So this is a Pinbar. So can you guys tell me the psychology behind this particular Pinbar formation on your chart or in the forex market? So this is one of the candlestick patterns that me personally I use whenever time I'm trying to check out the price actions side of trading, right? So right here, as you can see, by now you should be able to know exactly how to read your candlestick patterns. But before we continue, let me try to show you what we mean by this. So right here, it is a wick. So this is your wick. So right here, this is what we call a red body. Just take note of it. While right here, again, we still call this the highest point. And right here as well, we call it the lowest point of the market, or you can still call it the wick, right? So the lowest point of the market, that's how we read a candlestick pattern whenever time we see it in the forex market. So yeah, as you guys can see, so this is the real body of this particular candle, this is the wick, and also this is the highest point of the market. So the highest point of the market, and right here, this is the lowest point of the market, and this is the real body, as you can see. So the psychology behind this is that, as you can see, this wick to the upside, that's what we call a rejection to the upside. But how you trade this particular setup is kind of technical. What do I mean by it's kind of technical is that don't just trade this particular setup if you see it randomly on your chart. Let me just try to explain to you the psychology behind this particular type of candlestick, right? So yeah, like I said earlier on, that this is the lowest point of the market and the real body, and this is the wick. Also, we call it the highest point possible that the market has gone, right? So yeah, how do you trade this particular setup? Is the first thing that you're supposed to do is you're supposed to measure the length of the candle. Always try and remember that. Measure the length of the candle. That's the first thing that you're supposed to do before you start trading this particular setup in the forex market, right? So don't forget that. Measure the length of the candle. Then the second thing that you're supposed to do whenever time you're trying to trade this particular setup or this particular candlestick pattern is know how many pips is the length of the candle. After you measure it, you know the length of the candle. Then in this case now, as you can see right here, it is 33 pips, right? Since it is 33 pips, so what you're supposed to be doing is you add like, let's say 15 pips or 18 pips above the wick. you getting it now? So the psychology behind this particular candlestick pattern is there's a rejection to the upside. That's the meaning. There is a rejection to the upside, but like I've said earlier on, that don't trade this particular setup anywhere you see it in on a chart. No, don't try to do that. Make sure that it is at your key level, being at resistance level. Make sure you check out that first before you start trading this particular setup. Whenever time you're looking out for this particular setup in the forex market, right? So yeah, remember this is the part 1 of this video. Part 2, part 3, part 4, part 5, and so on are still coming to be uploaded on this particular channel as well, right? So right now, if you are going to measure it again, since we already know that the length of this candle, it is 33 pips, then let's add about 15 or 18 pips, making it to be 50 pips now, right? So making it to be 50 pips, then your stop loss is going to be above this particular candle, meaning that your stop loss is going to be 50 pips now. Since the length of the candle is about 33 pips, then you add 18 pips, you add 17 pips, making it 50 pips, then that will be your stop loss, and your take profit is going to be where your previous support level was. Then that's where your take profit is going to be, right? But remember, always go for at least 1 to 2 risk to reward ratio whenever time you're trying to account for all of these kind of candlestick patterns in the forex market. Remember guys, I said this is a short video, so real quick, let me try to show you where we can spot out these particular candlestick patterns, then so that we can practicalize it, right? As you guys can see, this is my resistance zone, right? This is my resistance zone. It was a support right here, but now turns to resistance, and you can easily spot it out right on this particular chart to be something like that, right? So you can see it was a support right there, acted as a resistance right here. Then what are we supposed to be doing next is, this is what I call the pin bar in the first market. Just try and check it out. So you see, this is a pin bar, this is a pin bar. Both of them are pin bars, you know, but this is a pin bar or this is a pin bar. Yep. So this is a pin bar right now. What are we supposed to do is, remember the first rule is measure the length of the candle. Always remember that. So in this case now, the length of this particular candle is 11 pips, right? So in this case, let's just add about 19 pips, making it to be 30 pips, right? So let's make it to be 30 pips right now. If we go further, it's going to be 30 pips. So this 30 pips is our stop loss. Always remember that 30 pips now is our stop loss. Then you take the number and record it as your stop loss, right? So your take profit will be right here. So from here now down to this level, you see that it is 112 pips, right? So that would have been your take profit, and usually this trade is supposed to be like 1 to 4 risk to reward ratio. So yeah, that's how we trade a pin bar, and pin bar is one of the price action signal that we use in the forex market. So yeah, I say remember, it must be at your key level. So these are the rules for you to trade this particular setup in the forex market, pin bar. The first thing is make sure it is at your key level, being resistance line, right? And the second thing is measure the length of the candle. The third step is the maximum pips that you can add to the length of this particular candle is 20 pips. That's the maximum that you can add for it. So add at maximum of 20 pips to the length of the candle, right? So after you know that, that will be your stop loss. Then the fourth thing is, that is the profit target. So your target is going to be the previous support level. That will be your target. So that's how you can trade particular setup in the forex market, being a pin bar. This is the end of this video guys, and thank you very much for watching. If you find anything helpful, or if you see that okay, what I'm sharing right here on this YouTube channel is kind of making sense to you, please just give this video a thumbs up, and also subscribe to the channel. Follow us on our social media platforms. Follow us on Twitter, Instagram, Telegram, and also follow us on our Facebook page, right? So yeah, I'm Su Israel the Trader. Remember to subscribe to the channel and click the bell notification icon, so that whenever time we upload a new video to YouTube, you'll be notified and watch that video as well. So yeah, once more again, I'm Su Israel the Trader, and I'm signing out right now guys. Thank you very much for watching. See you next time in our YouTube video. Have a nice day and stay safe.